Good morning, everyone. Welcome to our panel discussion, leveraging on Web3 technologies to build an inclusive global fintech marketplace and community platform. And welcome our panelists today. I believe everyone has been introduced, so I'll start right away with Lizette. I understand that you are a staunch supporter of applying digital finance to where there is positive social impact from alleviating poverty to driving financial inclusion. Based on your experience from working on projects that marry new technologies with finance, how may Web3 technologies further drive the building of financially inclusive communities?
Thank you so much for the question. But first, I'd like to thank Dr. David Lee for inviting me here and to the bigger SUSS team for organizing this amazing event. So at the Asian Development Bank, being a multilateral development bank, we are really looking at promoting digital development and making sure that we are supporting innovative technologies and also in investing in that. And you know, we are using startup companies also in our operations, and it's always interesting to see new technologies coming out of the marketplace that are solving real problems, real development problems. And you know, when you look at technology, it needs to be inclusive. And however, there are still some challenges, especially when you're working in the area of financial inclusion, because there are you know, real life issues, existential issues that many people face. You know, we have seen some improvements in terms of enabling financial access for the poor, especially in the rural areas, but there's still a lot of work to be done, and we need to see inclusive technologies scale. And there are various reasons for some of these new technologies that are not scaling as fast as it should, so that we are able to solve these development issues. Regulation for one, Web3 technologies, obviously at the heart of it is cryptocurrency, and while we're seeing cryptocurrency regulations in the more developed world, in the countries where we work in, the ADB works in about 42 countries that really have development issues. Many of our regulators still need capacity building in this space, and they look at cryptocurrency with apprehension, and for a good reason, because there's not a lot of very good media or news that's coming out about this topic. However, we, you know, digital technologies can help solve financial inclusion issues, especially in the area of Web3. And we've seen potential solution that can make a difference, especially in the area of cross-border remittances. We see Ripple making advancements in this area. Also, you know, Stellar, they're making good advancements in this area. However, in the bigger context of an $800 billion cross-border remittance industry, how much percent is that really? So it still needs to scale. And also we're seeing some advancements in, you know, in Africa too, like Acre Africa. They're using a blockchain-based smart contract to automate insurance payouts for smallholder farmers. We're also seeing decentralized credit scoring, you know, that's being implemented in the marketplace. At the ADB, we have worked with an ag tech company who uses blockchain technology, and they really focus on digitizing supply chains in rural areas of Papua New Guinea, Indonesia, and even Africa, Ethiopia. And they're making good progress. However, looking at the realities of financial inclusion, as I said earlier, where in rural areas data connectivity is limited, they've needed to adapt and make sure that the technology works both online and offline. And some of the challenges they faced also was that one of the learnings was, while the technology is high tech, they also needed the engagement with the rural community and those with the unbanked and underbanked to have a high touch approach, because with some of the people that we deal with, there are literacy issues, financial literacy issues, financial literacy issue, and digital literacy issues. So these are some of the challenges that we've had to face on the ground. And also, having regulators understand what the technology is about and what it can do, because when you start to connect your solution with financial services, then it becomes, regulators become a little bit more guarded, because obviously at the heart of what they do is customer protection. So for Web3 technologies, especially those who are focused on product development in this area, and if we are looking to develop products and solutions that really address financial inclusion, we have to consider the context in which the people that we are addressing the needs of. We need to understand their environment. We need to ensure that we develop we use human-centric design in our product development, and we understand some of the cultural nuances that the people that we are serving, so that we can ensure that we have a relatively or very successful product implementation in Web3.
Thank you, Lizette. The bottleneck with literacy, financial literacy, and technological literacy, which is a more serious bottleneck for them?
I think digital literacy is a big bottleneck for them, because there's an element of fear in making a mistake, especially when it comes to financial services. I just came from a mission in the rural areas of Mindanao, where we are experimenting and piloting virtual reality and augmented reality technology, and using that as a means of delivering digital literacy and financial literacy. And what we've realized is that interacting with a mobile app, as simple as that is for many of us here in the room, is quite challenging for regular folks for a smallholder farmer, for a small MSME, because when you're talking about hard-earned money, something that they have to access through a digital channel, they have a fear, and of course also there's a trust issue if indeed their money is going to be safe. And if they make a mistake, are they going to lose their money? So there's that kind of element. And you also have to look at the commercial element, because when you're accessing the app, it's costing them data. And so these are some of the things that we don't really think about, but are very, very real to the people that we are serving.
Thanks, Lizette. Eugene, Web3 holds the promise of the next stage of development from Web 1, which is the internet, and Web 2, social media, to where users control their own data and the balance is tilted away from dominant platforms. To reach there, developers need to continually experiment and innovate with technologies. However, this can be risky, especially for unprepared users. As financial services move to the Web3 space, the risks involved are the direct concerns of financial regulators. How can regulators strike a balance between keeping an eye on potential risks and at the same time not stifling innovation?
Thanks a lot, Chong-Hui. I think it's a very tough question that all regulators try to grapple with. I think regulators are always playing a catch-up game with new technologies being developed. I can only speak from the perspective of MES. I can't speak for all regulators. But in a way, MES, as the financial regulator for Singapore, is in a very unique position. We are sort of a super regulator. We look at traditional supervision of key financial institutions. We do money market operations, but we also promote market development, fintech development, not only within Singapore, but also internationally with other partners. So we have quite a unique view, and we see this engagement and this balance at a few levels. I think first is at the top level, at the strategic level, among fellow regulators and multinational agencies, including BIS, even I think ADB. We will try to reach consensus and, if possible, kickstart new initiatives which try to better understand these new areas that are emerging. That includes blockchains areas, that include areas of how we can merge self-owned identities or virtual identities, which can help MSMEs take away from centralized databases to MSMEs' own database. And that tackles multiple problems, right? Education, financial inclusion, so on and so forth. We also handle it at areas within our own nation, nationally. So MES does sort of socialization with other government agencies to educate them on what is coming ahead. Is it inevitable? I think Web3 is inevitable. So how that merges different technologies with different aspects, whether it's healthcare, whether it's education, whether it's finance. I think part of our role is also to understand and help our government counterparts understand what's the impact of all these applications, different partners. And in fact, a lot of the final layer we look at is engagement with the industry. And I think when people think of regulators, traditionally private sector is a bit afraid. I think they see regulators as policemen. So they traditionally try to limit their engagement with regulators. But I think I would rather view them as co-partners in development, and that's the stance which MES has taken with our Fintech Innovation Group. And so we've actually kickstarted a lot of initiatives and partner a lot of initiatives with private sector, partly to better understand the nuances of these different technologies, partly to also see where there are market gaps, where there are structural gaps which private sector will not resolve, but it helps to bring together partners to create an open digital public good. So just to name a few, I think we've kickstarted initiatives in the green fintech area, Project Greenprint, which I think will make a major showcase at our Singapore Fintech Festival. And that's to address the area of how you can synergize the current developments in ESG together with new technologies that are coming out to drive sustainable financing, impact investing, so on and so forth. Second area we look at is in terms of SMEs, and we had a discussion on this internally in pre-pandemic, so it was quite a while. But we realized that a lot of digital ecosystems were being developed in different markets. Everyone was doing their own thing. Everyone was creating their own closed-loop network. But they weren't talking to each other. And Singapore, I mean, how we thrived was as a sort of open harbor, physical harbor for import and export of goods. And where we thought we could also play the role is sort of being a digital harbor to connect different digital ecosystems. So we started a project called Business Sans Borders, which some of you may know. And that is to partner with other regulators, other multilateral agencies to see how we can connect SME ecosystems on both the horizontal level across different countries, but also the vertical level in terms of integrating the SME journey. And I think Lizette spoke at length about this, so I'll expand a little bit because she's the expert. But when we engaged, and this was really stood out during the pandemic, when we engaged with SMEs who were quite hard hit by the pandemic, A lot of them weren't digitally ready. A lot of them were cut off from key services, and a lot of them had challenges in financing. So the flip side is that most economies, 90% of the world, 70% of employment come from SMEs. But at the same time, they're not focused on because they're not the stars of most economic drivers in most economies. So what we tried to understand was, from an SME perspective, what is the customer journey that needed to be resolved? And I think when we spoke to others, ADB included, UNDP included, was the journey started with education first, which is very right? Digital education, financial literacy. But that needed to carry on into creating a digital trusted credential for themselves. Because there's no point doing a one-off effort and then they've got to restart the journey again with another partner. So they need to have a transferable, self-owned, almost token, which encapsulates all their digital identity, business behavior. So you build that multiple partners can look at this digital entity, say, we trust this entity, and we can fast-track financing for this entity. We can fast-track business services for this entity. So that journey was being developed, and a kickoff, byproduct arising from this business sense balls journey was, I think today we're announcing the Universal Trusted Credential project with United Nations, of course, other partners involved, on how we can create a standardized set of metrics and have it encapsulated in a token, in a digital identity for SMEs. The third area we are looking at is going beyond. Right? Your question was about Web3. There are many Web3 technologies out there, virtual identities, having fungible tokens, which allow for multiple financing. So how could we sort of encapsulate that and bring the power of Web3 back to the basic business unit, which is the SME? And we had started a project initially with Bank of Ghana. So that's how far we look at in terms of emerging economies, to look at a digital economy semi-fungible token, or project DSFT. So I think we started that a bit with Mike, who I think will talk a bit about it. But the problem statement we had was, in a developed or advanced economy like Singapore, where you have ready digital identities, we have national infrastructures, we have SingPass in Singapore, so that allows easy access to our digital identities or business identities. In emerging economies, you don't have that ready access. And how can you sort of streamline that into a single token that an SME will have? So the concept of the digital economy semi-fungible token was to build a sort of ERC container that allowed for multiple verified identities to be encapsulated in a single token. And that could be where the SME's current trade buyer contracts are, which can be created into NFTs. That could be the identities that is verified with government partners, that he's a trusted business, he pays his loan on time, so on and so forth. That could cover the UTC also, which we're launching with UNDP. So this is another initiative we thought was useful because it's scalable, but at the same time it gives identity back to the SME. So broadly, I think MES is very open on Web3 developments, but we are also very risk focused. We want to understand what's the inherent risk behind it, what's the inherent benefit, and then that falls into the respective regulatory oversights that we have.
I really want to ask a bit more about the trusted credential, the universal token, but I think you're going to announce it later. Yeah. So, okay, I'll leave it to that. Thanks, Eugene. Winston, Web3 technologies are helping people to build internet communities and marketplaces. Decentralization is a guiding light for them. Finance in these Web3-enabled communities, for example, may very well take the shape of DeFi or decentralized finance. How can banks continue to stay relevant in a world driven by Web3 technologies?
Panelists, moderator, fellow panelists, and everyone. First of all, I would really like to thank you everyone for giving me the chance to share our views. Okay, so fundamentally, I think whether it's traditional finance or maybe the new finance, even the Web3 finance, actually they are the same. There's no differences. They are all belong to the financial industry. And given the fact, finance is the main driver that we drive in the economy today. It needs to be strictly regulated because it will directly impact people's daily life, their wealth. So, given the terms of a new finance or the traditional finance, actually it's just a timeline because during the time the evolutions, demand changes, the market demand changes, and the advancement of the technology could better addressing the problems, the needs of the demand, the changing of the demand. So it's actually, whether we're talking about this evolution time of a fintech industry, it's actually the three roles that are co-working together and interbalancing each other. So first, we have these existing financial institutions. They are well-trained, and they are very much compliance-oriented. The whole DNA is about compliance, regulations. And they are actually the main reason why our financial system is sustainable and stable today. But then you can really ask these existing financial institutions to carry the responsibility for being stable, thinking within the framework, at the same time come up with the disruptive innovations, because these two are actually conflicting to each other. Therefore, we have a second role, which is a new financial institution. These are the people continuously observing the market, change of market demand, and the evolution of technology. And they will have to come up with a solution addressing the problem. And then they will have to acquire the first participant, the first users, to conduct their own experiment. Okay, through try and error, they have to prove that their solution is really workable. They have to prove to the market, they have to prove to the regulator. Okay, and the third role, I think, is the most important role to this question, is actually regulator. Regulator stays without bias. On one side, their responsibility is to make sure the existing financial institution operates within a framework. But on the other hand side, they have to observe what are the new technology, what are the new demand of the market. So they start a conversation with both sides, and when just time comes right, regulator will start a conversation. So I really believe that bank or financial institution, existing financial institution, have got nothing to worry because they are the essential part, the important part of our financial system, unavoidable. And the new financial institutions, yes, but you can conduct any kind of experiment. A lot of time, they even take the risk of regulation risk, like the professor of the last speech, almost went to jail. Yes, they're adopting a lot of risk, but they think out of the box. But until one day, if they can prove their solution really workable and start a conversation with the regulator, it was never going to be a massive adoption. So I think it's really this question, answer to this question, really the regulator's job. If we believe our regulators will do their job well, okay, then I think the banks or the traditional financial institutions have got nothing to worry. When just time comes right, this conversation will start, and we will find the solution. It's always been this way. Like ATM used to be a new technology. Visa, MasterCard used to be a very new technology. Internet banking used to be a term, but nowadays we don't talk about internet banking. It's part of banking. So once again, I really would like to say finance is all among the same industry. And I'm very optimistic about the collaborations and the partnership between new and the old. Thank you, everyone.
Thanks, Winston. The lines between traditional financial institutions and the new ones, the fintechs, are blurring. But do you think technology firms themselves are more and more like financial institutions going forward? Technology firms themselves, technology companies becoming financial institutions.
Yes, but financial institutions also with different stacks. Even with the existing traditional ones, there are companies developing financial softwares and providing softwares to the banks, to the financial institutions. It's always the same. So even though we are talking about maybe Web3, the blockchain, this is something like a fundamental layer one technology. I think it's just more decentralized in ways we attracting more people have the right to participate, injecting their brain power to come up together with a better solution, maybe more decentralized or more democratic or more distributed. But fundamentally, it works the same. It have never changed. So that's really my answer. Thank you.
Thanks, Winston. Okay, next question for Mike. Can you tell us how important it is for DeFi to power the financial services of an inclusive global fintech marketplace? And what does the soft protocol bring to the table in realizing DeFi as a robust economic reality?
Yeah, thank you, Professor. I think, I came from the DeFi space. We believe that DeFi plays a central role in Web3. It's actually the program value layer or protocol of the Web3. And it's a key, differentiator that, differentiate Web3 from Web2. In terms of the inclusive finance, I believe that the top 3 value proposition for DeFi is open. First, open. Second, programmable. The third one is cost down. Okay. DeFi is probably the only proved solution, or I should say infrastructure, that allow users or developers to openly program value and finance, and maybe program credibility, program governance, program credentials, program data. So program everything virtually in a transparent way under a certain set of predefined clear rules. So DeFi, so with this capabilities, so in the near future, we will see that even those small and micro businesses, with the tools, with the powerful tools support, they can program their transactions. They can program their credentials. They can program their, digital economy behaviors, or credits, and that's a powerful technology. That's, I think the technology that we never saw before. So I think as a result, I just mentioned the cost down. As a result, if 10 years from now, let's say 10 years from now, somebody tells me that the cost, the operational cost, serving a small business will be only 0.1% of that of today, I won't be surprised. I won't be surprised. So, but in solve, but I should say, DeFi is not the answer of every question. A lot of challenges before us, in front of us actually. DeFi, for example, how to solve the regulation problem, how to enable regulation. DeFi has a very great potential to support regulation, but it's just not the major topic inside the space. And second, in DeFi, we value a special trust model called radical transparency. By radical transparency, it basically means that everybody can see every details of everybody else, right? So you can see every details, every piece of information of the transactions of others. That simply doesn't work in the real world, right? So how we can solve this problem to apply DeFi, this powerful technology, into the real life to help the small and MSMEs, right? Small and medium-sized business. That's why Soph is here. In Soph Protocol, we're building innovative yet solid business, I think, technology. Basically from two different angles. First is to create or develop a new token standards called ERC 3525, which is probably one of the most advanced or sophisticated token standard to describe the real world asset. And we put a lot of, I should say, features into this token standard. So the token follow this standards. We call it semi-fungible token. That's Eugene just mentioned, semi-fungible tokens. It's very flexible. And the most important thing is that we build the programmability into that token standard. So basically, it's a visualized set of smart contract. So it's very powerful. So we use this technology to enhance the programmability of the DeFi. At the same time, we know that we need to solve some problem of DeFi, and that's what we have done, or what we're doing in Project DSFT, initiated and led by Eugene and his team. We create a special structure, a pair of token and verifiable credential. It's a signed digital document to implement so-called controllable transparency instead of radical transparency. So I have a limited of time, so I can't go deep into the details, but we have a booth in the expo space. So I urge every one of you who are interested in this new technology to visit our booth space. Our booth space is together with GFI. So I think DeFi can play a huge role in inclusive finance in the future. But that's not, that need more people to do innovations and developments. Thank you very much.
Thanks, Mike. Xuan Hui, I understand that a mission of the Global Fintech Institute is to transform Singapore into a global fintech talent hub. Bringing together the community of fintech talents is a challenging task. It certainly needs to be inclusive, as these talents may hail from different backgrounds, and the countries from where they come from may be at different stages of their fintech development journey. What are the plans of GFI to build up this global community of talents?
Thanks, Chonghui. I keep seeing the 1 minute and time's up flags going around the room, so I'm going to keep it really short. I'm from Global Fintech Institute. We are global credentialing, not-for-profit fintech education organization. We are headquartered in Singapore. And if you should take away something to remember about GFI from this room, because I have very limited time, I'd like to share about 2 programs that we have in place to build this global community, inclusive community of fintech professionals. So the first one, allow me to share a bit about the whole talent development program that GFI has in place. Some of you would know that GFI runs a Chartered Fintech Professional Program. So I think, like what Eugene has mentioned earlier on about, and as well as Lizette, about education. So we firmly believe in the cause of education, and that's why we are here in the room talking about fintech education. And to be able to build a inclusive community that serves markets that are at varying stages of development. We have in place different types of programs. We have the expert programs, we have the professional level programs, which are more geared towards people, markets that are more mature. We engage a lot with MAS in the Business Sense Borders programs, where we run SME financial literacy programs with our partner Proxera. And we go right down to the mass market kind of foundation of financial literacy, where we're not even dealing with digital financial literacy, we are also dealing with fundamental digital literacy as well as financial literacy. So it's a wide range of programs that we have in place. Of course, then the apex of what we do is in the Chartered FinTech Professional Program. So that's one thing. So we have a range of programs that cater to different people. And I think the thing about building communities is being able to provide sustained value, utility value, to all the participants of the community. They feel that this is a place that they can continue to benefit from, regardless of the stage of the development. And as they grow, they continue to find utility for being part of this community. So that's what we are trying to do at GFI. So, and in order to move the mission a bit one step further, we have come together, this also with the inspiration of MES, to build a platform called Flex, FinTech Lending Investments Exchange, where it's a marketplace platform, digital online community platform, where we want to build the bridges for FinTech companies, be it startups or early stage, and investors, lenders who are interested to invest in these new ideas that the FinTechs are bringing to the table, and talents, right? Because we have been in this journey for 3 years now for GFI, and we realize that the pain of the industry is not being able to find the right talents when they need them the most. And that's the bridge, the gap that we are trying to fill at GFI. And with this platform, with the support of our ecosystem partners like Mike, our regulators like MES, and of course, industry associations from all over the world, including Taiwan FinTech Association and so forth, we hope to bring everyone together in the ecosystem, right? And create that platform where everybody can communicate, find each other's, find solutions to the problems that each of us are facing in the community, and thereafter, I think, then the community will stay together, right? In the longer run. So happy to share, the GFI stands at about 200 members now. Of course, most of us being affected by COVID, we are largely based in Singapore, but increasingly we are moving outside of Singapore, growing our global footprints. And we are looking forward to working with partners from all over the world, be it in FinTech education, with industry associations which are interested to onboard to this platform, to find your partners in different nodes of the world. Like we like to see ourselves as a hub, and we look forward to having many spokes across the globe. Thank you.
Thanks, Xuan Hui. We are out of time, actually. So thank you, our panelists. Thank you, Lizette. Thank you, Eugene, Winston, Mike, and Xuan Hui for your contributions. Thanks, audience, for your participation. And thank you, Huawei Cloud, for making this event possible. Thanks, everyone.